morning, everybody. Welcome into another pre-market live stream here with the Everyday Growth Advisors. I hope you are having a good morning. We are on a Wednesday here of a short week. Tomorrow's Thanksgiving, so the market's going to be closed the entire day, and Friday is going to be a half day, which means that we're going to have just half a day of trading more after today. Welcome into the stream, and if you are here for the first time, make sure you smash that like button, hit that subscribe, and let's get this party started. So we have obviously nothing changing on the macro front today, so we're going to keep it short and simple. We'll go through the technicals and then go through some of the price action that has developed over the next couple of days, or rather the the days that have passed, Monday, Tuesday, and today is going to be Wednesday. We'll also look at some opportunities in the market, kind of going through the different sectors. And yeah, if you have any tickers that you want me to break down, put them in the chat right now, and I'll get to them right after I'm done with the technical breakdown. Once again, we have been range bound here on SPX. Nothing has changed. 4050 and 3900 have been the key levels that we've been chopping between. Going into the 4 hour, you can see very clearly that we haven't been able to break above, and neither have we been able to break below. Yesterday we got once again another gamma squeeze as market dealer kind of flipped exposure midway after getting some exposure to the downside. And I've already mentioned this, and this is going to be continuing to be a trend. You're going to see this happen more and more often with the gamma clenches in the market. We're going to see the market dealer rollover become more frequent as the 0-day expiries have started to pop up. So today still remains the same setup. As long as we don't break above or below, we don't play SPX or SPY. As I've mentioned, that it's pointless to trade between this chop. You don't know when it's going to break out or when it's going to fall below. My way of thinking is only after you break out of 4040, which is equivalent to your SPY, what is it, 40250 roughly? Yeah, 40250 on SPY, then only should you take any upside here. If we do get the upside burst, we are likely to come up to retest 408 to 410. That's the region that we'll be looking to kind of expose to the upside, and that will be the touch of the trend line to the upside. So that is what we'll be watching if upside exposure continues here. To the downside, if we get another rejection once again at 4040 or so, then we come back down, retest 3900 or 3910, let's say, and that brings us further back down into 3800 or 3840. For the next level to the downside. So really clear pivot points here. There's really not much you can mess up here, okay? Do not trade the indices if you're not comfortable with scalping or intraday trading. Yeah, it's just not the way to go right now, okay? Put your efforts and your concentration on other parts of the market where there are opportunities, rather than putting your constant attention here and then trying to take trades and then failing and then getting frustrated yourself for doing poorly, and that sends you off onto a negative spiral. You don't want that for yourself, okay? So keep yourself focused on what there is an opportunity in and leave everything else out. A very important and prominent difference between the two indices right now, as I've mentioned before, and the whole of this week, is that the NASDAQ is considerably more weaker than the S&P 500, and this is something notable because remember that the way that these two indices are tracked, they're market-based or market cap weighted indices. So Apple and your Google and your Tesla and your mega caps, the usual suspects, Magma, they're the ones that hold a majority weight in these indices. So until and unless you see the market breadth or the market internals improve, we're not going to see anything on that end. Okay, let's delete this off and ban this person. Sorry, there was somebody who was posting something that shouldn't be there. Okay, yeah, back to it. So once again, as you don't see the improvement in breadth over here in Apple or on Amazon or on Google or on Microsoft, not until we see breaks in all of these can we see a real move to the upside on the indices. Microsoft is looking a little better than most of them this morning. So let's kind of jump into that. And remember, the market breadth and the internals are really the engine that drives the vehicle. So you need to always look under the hood to see what's moving in order to see what the general direction is. This is honestly one of the easiest ways to come up with opportunities in the market. And it has been my bread and butter for many, many years. This is actually one of the first few things I teach in our courses and in the mentorship courses that I have. So yeah, that's definitely something that you should keep your eyes on and know by hard what are the top few holdings of the indices. See if their market caps are changing, etc., etc. Those are important things. Next, looking at IWM, which has been trying to retest these upper levels here at around 185. It failed once, it failed twice. Let's see if third time's the charm or if we're going to continue to the downside here. We could be trapping a bunch of people here, and I will definitely tell you guys that they have been sweeping IWM puts actively in this past week and last week as well. So that's something that you should be watching, because that's your small mid-cap growth stocks, which are being pressured by the high interest rate environment that they are in, constricted lending from financials, and yeah, that's going to cause more pressure on IWM to the downside if things don't improve or if we don't get easing of financial conditions. On the flip side, however, there's also more pressing, interesting developments here on the VIX, which yesterday moved down all the way into 2160 or so, which is the next key level that I've mentioned. This level here, 2125 is what we came down to, I guess. And I've mentioned this before. Now we're in pretty much like the green level here, where the VIX is looking like it wants to cool off on volatility for a little bit. This typically sets up for a wave to the upside on indices, but then we don't have the same conviction just yet. And if we do get that upside move, then it might be with a delayed reaction a little bit. So you have to keep your eyes on that. So the way that I look at this right now, the bear market rally that we're seeing for the third time now is coming to an end. And that means that we get up, if we get a breakout here and this breakout moves all the way up to 4150, which is the target, this will be the last line of defense here for bulls, and this will also be a area of control for bears to start to take exposure in. So my way of thinking about this is we want this move to the upside to retest this level so that we can take on some liquidity and supply to push back down into December FOMC, which will be aligned in some ways. And maybe we don't get a Santa Claus rally, but maybe this rally comes in December, or this push up comes in December for us in time to take downside exposure heading into January, February, which is the first half of 2023. And that should bring more pain in terms of earnings in the next quarter, because as you guys know, the market's now pricing in all kinds of developments. So the VIX down here gives us that possibility for the rally in the market, and we are seeing some of the underlying internals improve today pre-market. We're seeing Tesla also got bought up a little bit. We're seeing Microsoft up a little bit pre-market. Apple not really, but Apple can always rally later. And then Amazon, I think it could make a deep rally here back into 100 or even 105 to retest this trend line before coming back down. So there's a lot of room here for the upside, mean reversion, and so those are a couple of things that I'm watching right now. Bond market also continues to move up here. So the bond market is also pricing in the possibility of a Fed pause or a likelihood of a lower rate hike in the next meeting. The Fed swaps are already pricing in a 54 basis point rate hike in the next meeting. So possibly if we don't get a 75 basis point rate hike, we might see a 50 basis point rate hike. But this is something that we'll have to watch as we get into December, where those are going to get. Now, the next thing is dollar index. This is more important to me right now. Dollar index rejected the 108 level yesterday, and it's on its way down here. This is an interesting development. I think if dollar index comes back down to 104, this gives us that clear ascension in SPX that we need. This relieves the pressure on equity purchasing power, and it allows for that rally to be fueled. So the more the dollar index recedes here, this will give us that jet fuel that we need for SPX and NASDAQ to finally push up into that 4150 and for NASDAQ to push up into that $12,000 level, which is a clear psychological level at this point. You know, if NASDAQ really starts to get very, very bullish, then, you know, it could really go up to test the bullish pivot here, which is 12,780. But that's really, really far up. So that would mean a big, big push up into the mega caps. So yeah, that's what we'll be looking at here. Remember also, if NASDAQ breaks out here, then this becomes a bit bearish, bullish reversal out of this downtrend, which has been very, very carefully rejecting this level here. So tactically, I think that tech wants to remain weak here versus other sectors within the market. So it's a very, very interesting position that we're in, because tech can't rally without SPX rallying or vice versa, and that's going to probably suppress the market, or if the breakout happens, it's going to be pretty short-lived. That's just the way I'm looking at it. There's a lot of pressure to the downside here, just too much pressure. So yeah, that's where everything is in terms of internals, breadth, the background, the engine that drives the market. Remember, this is just all really important things that you need to keep at the back of your head while you're trading, because you know, one small move in the market is going to cause that big rip or you know, sell off. So yeah, semiconductors. I've been chiming about this one for, I want to say, 2-3 weeks now, even before institutions started putting out the reports. We are coming back into a boom cycle here with semis, and I took some exposure for NVIDIA calls. I didn't want to play AMD because the gamma move on that is too low. I did scalp AMD yesterday and then played a intraday NVIDIA call, which paid out pretty nicely. So we'll be looking for more position building here eventually on the next wave to the downside and also upside. And I'll be looking to take longer dated NVIDIA calls. I already have bought some shares way down here, so I'm happy with my you know, averaging end of the prices there. Let's also talk very briefly about the market internals in terms of the different sectors here. So technology had a very telling and important key pivot. Energy saw a big move this pre-market, mainly because OPEC announced that they're going to be issuing supply cuts. That was the rumor, and then it got denied, and now it's confirmed. So markets whipsawing back and forth in energy markets. Do I want to trade this? No. Why? When the market whipsaws back and forth like this, I want to let supply and demand imbalances clear first and let the actual true trend emerge. There's no point to try and second guess or guess where market participants have exposure in this market right now. If anything, I'm more comfortable taking the short position here, mainly because of the risk to reward ratio opportunities. But apart from that, I don't want to prematurely enter shorts on XLE or XOP or any of the other energy proxies, because that will just spell a disaster if the market starts to rip. So therefore, the right move in terms of energy here is to hang tight, be patient, wait for the right opportunity. Enphase Energy, this is one of the stocks that we're watching on our snipe list, and this is an opportunity of one of the opportunities of the week. We were looking for a 320 rejection, and this is an ascending wedge, so you guys know this is a bearish pattern possibly. Hopefully we can get that move to the downside. Eventually, we're looking for this rejection in this supply zone. Once we have confirmation, we'll take that bearish trade, but Enphase Energy has been very volatile in the past couple of trading sessions. And this is definitely one of them that I'm looking at to trade, you know, intraday or even as a swing, once I get the right movement and the right target entry for this trade idea. So we're just waiting for a confirmation on this one. We'll probably be playing that one. Tesla saw a lot of weekly flows into 175 calls, so those are going to already pay out today. They were really aggressively betting on those calls all through yesterday and the day before, and a part of me thought that, you know, some of it was sold calls, but now we're seeing more increased exposure to the upside, and they, you know, Tesla 180 calls also have been coming in. So a retest of the 180 level is not out of the woods here with Tesla, and market's gonna open right now. So yeah. Any other tickers? Okay, so we have XOM and Tesla. Okay, so I just covered Tesla. Tesla, we want to see a retest of 180, and then either a 180 break above and bounce like that to the upside, or we want to see 180 rejection and then continue downside. That 180 point is going to be a very key pivot point, I would feel. 177 to 180, basically, this little zone here. There's also a gap fill around that area, so Tesla might go a little crazy to go, fill that gap around 180 or so. So that's what I'll be watching for on Tesla. And that's kind of my plan with it. Okay, so let's look at XOM. So XOM, once again, very choppy up here. Same thing as energy. The same rule applies here, and I just mentioned it, so I think you should know what I was talking about. Avoid playing this here unless you break clearly above 115 and you start bouncing above 115. You have a clear establishment that demands higher than supply here. And to the downside, the risk-reward ratio is nice, but once again, as I said, if the market decides to rip with the SPY and NASDAQ, then you're going to be caught with your pants down taking a short position in energy, and that's not what you want. So my advice to you is avoid XOM right now. Wait till things get better. That's a better plan over here. XLF. Okay, so XLF, this is a very it's a very interesting one. This is the third, possibly the fourth rejection here. If it's a double top indeed, then we'll see that reversal to the downside. Other than that, XLF, if it continues to rally here, could get up to 36.87. That's the next level here for a very big rejection zone. This level right here, 36.87. You're looking at basically a $1 move on XLF to the upside. The upside, I don't want to play the upside here. Risk-reward ratio is terrible. If anything, and it really does break out of this $36 level, then I think wait for it to rally up to 37 and then short it. Once you get the confirmation that 37 is indeed the rejectable level here. So I think after this huge move up, that's the way you should look at XLF temporarily. And yeah, that's my opinion. I think it's pointless to play the upside. Pretty capped out. Risk-reward ratio not that great. Wait for the rejection, then play it instead. That's a better move here. All right. So we will be holding the pre-market live on Friday. And I wish you guys a happy Thanksgiving. Market is closed tomorrow, so make sure that you guys don't turn up and be expecting the market to be open. Yeah, I will see you guys back on Friday. I hope that you have a happy and safe trading session. And yeah, see you guys on Friday, guys. Peace. Take care.